Hello guys, in this video I'm going to tell you about time frames, right, and how to combine time frames with every other thing you've learned. So it's a new tool to be added into your toolbox, right? So let's go. The market moves every time throughout the week, throughout the day, except in some like really special occasions. Like during the weekends, currencies does not move. They close on Friday and open on Monday mornings, whereas crypto moves 247. Okay. Now, like I said, a candlestick captures price action within a certain time frame, time limit, or time constraint. So if you click any of these time frames up here, you're seeing 12 months. This means each candle took 12 months to complete. Alright, like as you can see, this candle, 12 months is a year, right? So this candle is a yearly candle. And you can see we have 7 more months and 29 days for the year to run out. Okay, so this is how long it takes the candle to burn. But if you get a yearly candle, it's going to burn for 1 year. Alright, so if you come all the way down to the monthly candle, it means each candle burns for a month. So every candle takes a whole month to complete. This is a monthly candle. The month just started. You still have 28 days and 9 hours to go. So come down to the weekly, and of course you would know that inside a month there are 4 weeks, right? So inside every monthly candle there are 4 weekly candles. Inside every weekly candle there are 7 daily candles. Inside every daily candle, 24 hourly candles, because 24 hours make a day. So this is just how the time frames are broken down. And as you're going downward, you start seeing more. So initially this was, let's go to 6 months. Initially this was just a bullish candle that started here, closed here. But when you go lower to like the daily, you're getting more information on what really happened inside that candle, right? So we'll call these time frames, right? So being on a higher time frame means it's just like you're at the top of a building, the highest building in your area, right? So you can see the entire expanse of your area. You can see, you have a broader view, okay, but you can't see the details. So you can tell where you are in price, but you can't tell where you are relative to where every other person is. You should just know you're up there, but how do you now come down from that point to execute? Is the reason why you come down to lower time frames, because you're looking for details. All right, you're looking for details. So that's for the higher time frames. While being on the lower time frame is just like, let's say, okay, let me use this analogy for instance. I take a blindfold, you're sleeping, you go to bed at night, and I take a blindfold and tie it around your eyes, take it to the top of a building, the highest building. It will be very easy for you to just spot where you are. In fact, it's very easy for you to know if you're even still in your vicinity, all right? Because you're going to see places that are quite familiar, places you've been around, and you can now map your way back, find your home, and then know how far you are away from your home, right? So that's something you can do on the higher time frame. But if I blindfold you, take you to maybe somewhere like some blocks after, let's say, the next street, put you to the ground, your face to the ground, take off the blindfold, but I'm pressing your head down to the floor, to the ground, or to the floor, wherever it is. You're going to be seeing sand or grass or cement, but you're never going to have enough context to know where you are, relative to your house. All you're seeing is soil, right? You're seeing so many details that you don't have context to put these details together to make an objective guess as to where you are. Okay, so for you to now start getting this context, you have to start getting up. So as you're raising up your head, you're now seeing more. Your peripheral vision is now wider, right? So you're seeing context. As you keep going up, you now start seeing more context to base where you are on. Okay, but if you're up there and the rain just fell, so the floor at the bottom is very, very muddy, you won't know if the floor is muddy or if the ground is muddy or if the ground is wet. You just know that's the base, right? So you don't know where to jump, where to land. You just know you're somewhere high. So for you to be able to trade the forex market, you have to combine all these time frames. You have to start from the higher time frame to get context, and then you start coming downwards to get enough detail, or to execute rather. All right, so this is why we combine time frames. Most people come and say, which time frame do you trade? Whenever you hear that question, just know this person is an amateur trader, so he does not really know what he's saying. And I mean, we all started there, right? But you might have a time frame that suits you. And why is a time frame going to suit you? My best guess is because within that time frame is how long you can wait for a trade. Now, this brings us to the 3 categories of traders. We have the swing traders, we have the intraday traders, we have the scalpers. Now swing traders hold trades for, I'm just going to push to the extreme, for years to around days, right? The intraday traders can't wait that long, so what they do is they hold trades from days, let's say a week, to around 4-hour time frames. These are intraday traders. They just want to come on the chart and capture, let's say, at least a trade a day, like, or a couple of days. They don't want to wait, that long. Whereas there's some people that still can't trade, like it's too long. Like, why am I waiting for 4 hours when I can just catch some moves? So this is where they start from the 4 hours to the 1 minute, which is the lowest time frame. I'm just using extremes here, which is the lowest time frame. So the smaller the time frame, the quicker your trade can get executed, and the quicker you can reach take profit or hit stop loss. You can just come onto the charts now and just within 5 minutes go to the 1 minute chart. Within 5 minutes you've made profit or you've made loss and you've gone your way. Maybe you're busy with life and all right, but the wins are always going to be small. In terms of how much you're going to catch is going to be small, but that also depends, and I'm talking about this in subsequent videos. Okay, so different type of traders. Mind you, nobody registers at the beginning of your trading journey. Nobody registers and say, I'm going to be this. It's over time you now identify the time frame that works best for you. Okay, but at the same time you still move between being a swing trader and a scalper. You could be holding a huge buy trade, but at the same time you're scalping in between that buy trade to capture the retracements and the pushes and the retracements and the pushes. Okay, so that's what happens. All right, so it's the same way because you're trading the forex market, you can't just say you're a buyer and then you're always going to be a buyer. That means you're always only going to be buying, right? The difference between the forex market and the crypto market is while crypto traders buy cryptos and hold them and wait for price to go up, forex trader can trade even when the price is coming down and make money. All right, but it's still the same information, the same knowledge you have, the same knowledge I'm giving you, the same knowledge you can use to make your analysis and know when to even trade cryptos. And so that's that about that. Right, so what kind of trader are you? It depends on your predispositions. Are you very hasty? Are you very calculated and patient? You do better with the higher time frames because you know how to calm down, because higher time frames give you enough time to think and re-strategize. But if you're a scalper, you don't have the time to strategize. You could be making analysis and the candles are moving, especially when the market is very volatile. So these are the three types of traders. Just like identify which one works for you, right? And you can shift, right? You can always scalp and you can always, swing and all of that, right? So in our next video, I'm going to give you a brief understanding of the market again, but I'm going to be doing it with context to currency pairs. All right, so I'm going to be putting together everything you see on the chart and why you're even taking buys and why you're taking sales and what it means, so that'll be the next video. So this is going to be bye for now. All right, bye.